Is the gold and silver price about to launch into the stratosphere? I'm Biko Konstantinos, and that's what we're going to talk about today. My name is Biko Konstantinos, and my goal is to support your investing and trading through up-to-date market analysis. Don't forget to like this video and leave me a comment. Please subscribe to my channel, as that would really help me continue creating content. So why is gold and silver potentially preparing for a major launch upwards? That's the question. So we've got two factors to consider. We've got the fundamental reasons, the overall general market reasons, and we've also got technical reasons that are supporting an imminent rise in the gold and silver price. Let's start off with the fundamentals, or the general market conditions that might be supporting a gold and silver price rise. So number one, we've got inflation. So gold has always been considered as a hedge against inflation. So it can be considered as a real asset or a real store of value that you can hold that can protect you against your earning power being eroded away through inflation. Number two, safe haven status. So gold is a protection, or is seen as a protection by a lot of investors and a lot of the market participants in times of upheaval. So at the moment, you can see massive upheaval with governments trying to work their way through and to keep their economies going, and trying to find a medium between super low interest rates, massive stimulus, and everything else they're trying to do to keep their economies going. But they're also trying to not overheat their economies. They're trying to make sure that they don't have to raise interest rates too quickly, which could cause a massive downwards effect on the entire stock market. So there's multiple different things that world governments are dealing with. So the safe haven status for gold and silver is very important, and it's always been seen as a haven or somewhere you can put your money, because it's a real asset, it's something of value, and it's something to protect your wealth or your money in case things go bad, in case economies go real bad. Another general fundamental for gold and silver is that it's always, throughout all of human history, it's been used as a form of wealth and a form of trading. So for many thousands of years, people have traded with gold, and it's had value, and you could purchase things, and you could trade wares and trade different products, and you could store it as a store of wealth. So there's a significant attachment to gold and silver being something of worth, something of value. So that's different to, paper money or currency, where you look at it and it's just paper and it doesn't seem to have value except for what we're told it's worth. Whereas gold is intrinsic in human history. So in people's minds, gold has always been worth something. And for that reason, it could be very important going forward that gold retains that value when other things seem to be very shaky and in trouble, that people return to gold because it's been such an intrinsic and such an important form of wealth, trading, and value over human history. Lastly, regarding fundamentals, there's no rush like a gold rush. Remember, part of our history, there was some amazing gold rushes in America and in different parts of the world, where people literally moved into areas to try and partake of the gold rush, to try and mine gold, dig gold for themselves. And so a gold rush is part of human history. So instead of actually digging gold and trying to move to areas of gold, a gold rush could be happening in front of our eyes where people, investors, traders, and market participants rush to get gold and rush to get silver or other precious metals as a form of a hedge, as a form of get some value to make sure that their money is protected. So there's a number of different reasons that could create, or there's a lot of different factors happening at the moment that could create the next gold rush. And this one will be like a digital gold rush where people look for investing in gold price and investing in other things that can benefit when the gold price and the silver price rises. Now, technically, looking at the markets, there are also a number of factors all sort of ramping up together that could really put a rocket under the gold and silver price. So to have a look at those, we're going to look at some charts. Okay, the first chart we're going to look at is the spot gold chart weekly. So this is US price of gold, and we go weekly so we can go all the way back and get a really good history. So as you can see, this is taking us back to 2011. There was a spike up to the high 1800s, close to 1900. So it just hit 1900 US dollars. So fast forward 10 years, and guess where we are? Right at that pivotal place of 1900 US dollars. So that's at a very significant point in the long-term US dollar chart. So prices, after this little downtrend here, after they had this big spike after COVID, they've come back up to this point where we were way back 10 years ago. And if we can keep going and consolidate above that level of 1900, that is very significant because this here was a resistance point. And if we can climb above that level and consolidate, that 1900 could very well be an amazing base or an amazing support level that could be used to propel the price forward. Now, if you check out my other video, which is called a cup and handle pattern, so is gold forming a cup and handle pattern, then that's another significant pattern when you look at this long-term chart of gold. And what we mean by that is there's a top, and over many years, so the longer the pattern goes, the better, there's another top. Now that forms the cup. So this big curve here is what we call the cup, and then this slight downturn, which can't be too big. So if there's a slight downturn after that, that's what's called the handle of the cup. And then what happens is if the price can surge through the top of the cup, then what we get is a beautiful cup and handle pattern. So for example, the top of the cup, you could put it around about that 1900, but I'd prefer to put it around about that 2000 level because that's really significant psychological level. So what happens is we've got the cup, we've got the handle. Now if the gold price can continue and surge through the top of that cup, that forms what's known as a cup and handle pattern, which is an extremely strong continuation pattern. And if you look at my other video, the price target you could measure from the bottom of the cup to the top, you could measure that forward from the bottom of the market to the top, which takes us to close to 3,000 US dollars. That's a possible potential of this pattern. Doesn't mean that it'll definitely get to that level, but it just means that this cup and handle pattern really can give strong potential because you've had a high, you've had another high, you've had a small retracement, and if you can surge through both of those highs, then there's nothing really stopping you. You're in blue sky territory, and it's that major resistance that's been hit twice now becomes your support, and it can propel the price forward. The last thing we're going to look at with the gold price is the daily chart, and we're going to look at two very important things. The first one, we've had a bit of a downtrend happening over the last several months, and as you can see, recent price action has broken through that downtrend and has stabilized above it. So what that means is it hasn't shot up quickly and then come back down below it. It's been a clear and successful breakout of that downtrend. So the other important factor that we're going to look at is the moving averages. So we've got a short-term moving average of 50-day, a simple moving average, and then it's come down and it's broken below the 200-day moving average here. So that's a bearish sign or a negative sign. But as you can see, this 50-day moving average has turned up sharply based on recent upwards price action. Now, what happens is when this 50-day moving average crosses over the 200-day moving average, which it looks imminent, so it looks like that probably happen in the next, number of weeks, then that creates what's called a golden cross. So it's a 50-day crossing above a 200-day, which is probably one of the most widely used golden cross conditions of all market participants. So that'll be watched very closely, and that's a very bullish sign. So we've got two things happening. We've got a breakout of the downtrend, and we've got a potential golden cross, which looks like it's very imminent to happen with the moving averages. So combined, very bullish indicators. Now looking at silver, if we go back 10 years, there's nothing like a rush on the silver price. As you can see, silver can rise dramatically. Now, since then, it's done a bit of a curve similar to gold, except it hasn't come back anywhere near its previous heights that it reached back in 2011. But what we can see is that after COVID, the price rose very sharply to around about 3,000. And since then, it's been in a bit of a consolidation, but is trading closer to that high of around 3,000. Now, looking across to the daily chart, what we see is this nice consolidation. It's hit 3,000 twice. So twice it's been tested. So once we get breakthrough, silver could really rocket ahead. Now, if we once again look at our moving averages, if I'll add in the 200 as well. So what we can see is the 50-day moving average, it crossed above the slower 200-day moving average here. And so that's where our golden cross was. And as you can see, the 50-day moving average has not crossed back below the 200-day moving average and now has started to break away. So if the price of silver was to break out of this consolidation and to continue above 3,000, then that golden cross that was signaled back here would definitely still be in play, and basically the 50-day moving average would widen out, and there wouldn't be any cross of the 200-day moving average. But just looking at this chart of silver, it really looks like a spring. It looks like it's come up, it's hit that high again and failed at that high. It's coming back towards that high level of 3,000. And when something just keeps testing and keeps testing, it sort of acts a bit like a spring. So it tries to hit it, it consolidates a bit under that level. And when it really does break through, then momentum can really be strong. And so that's why silver looks very strong at the moment. So if gold and silver prices are about to rise dramatically, and if there is going to be some sort of new digital gold rush, how can I or how can you benefit So we're going to discuss a number of ways at a high level that you can benefit from a rising gold and silver price. Firstly, you can own gold or silver physically. So that means you might hold gold or silver jewelry, or you might hold gold or silver coins. So you can purchase these and actually own them and keep them physically. Secondly, you can own gold or silver, but you can have it looked after for you or stored for you. So you might be able to purchase some gold, and say the Perth Mint in Australia might hold it in a secure place for you, and you just pay them a small amount of money for them to hold it. So that's owning actually gold and silver, but it's kept somewhere for you, so it's protected and it's safe, and you just pay a small amount of commission for that holding, and maybe banks might be able to do that for you. So there's a number of ways where you can purchase and just have it held for you. Another way you can profit from a rising gold and silver price is to actually buy the actual gold or silver price. Now, what I mean by that is on the stock market or on different trading sites, you can buy products that just basically follow the gold price. So whatever the gold price is now, you could purchase that instrument. If the US gold price was 1900 around about, you could purchase it at 1900. And if the gold price goes up, you can sell that at a future date, and you will make the profit of the change in price. And that's the same with silver. So you can actually purchase instruments on the stock market or trading sites that actually follow the gold and the silver price. And if the price rises, you can obviously sell and make a profit that way. Another way you could benefit from a rising gold and silver price is to actually purchase stocks on the stock market of gold miners, so gold producers or gold explorers. And the reason why that is, if the price of gold or silver goes up, then those mines that are producing gold and silver, they'll be able to realize more profits for the gold and silver that they produce. Or if it's explorers, there would be usually more value attached to those explorers as long as they're finding gold and silver, because the gold and silver that they're exploring and they're digging and they're proving is now worth more than it was when the price was lower. Now, if you wanted to, say, reduce your risk of owning individual gold or silver miners or producers, there's what we call exchange traded funds, ETFs. And by purchasing an ETF on the stock market, you could have a basket of gold miners or producers. So for example, you might have the top 10 within your country, and that spreads the risk. So you don't have then the risk of an individual stock. It's spread out over, 8 or 10 or however many the ETF has. And that's one way you could participate in a rising gold price or silver price without having too much risk of individual stock issues, which could happen to any individual stocks. So that's just been a high level way that you can profit from a rising gold and silver price. Now I'm going to go into all those different ways in a lot more detail in a future video. So please watch out for that. But here I've just given you a real high level way that you can start thinking about how you might be able to profit if the gold and silver price starts rising and continues rising into the future. I'm Biko Konstantinos. I really appreciate you listening in. I want you to get value, and I hope to support you with all your endeavors regarding your wealth, your health, your happiness. And thanks for tuning in.